So, Shrey, capital markets financing in a time of crisis, have markets proven themselves to be resilient, and how can they become stronger?
Thank you, Toby. I think it's fair to say that it's been a very testing period of time for capital markets. And there was an interesting discourse due to the seismic shift in volatility that we saw at the start of the onset of the pandemic in Europe and the US, where people were effectively talking about should markets be open when the VIX is at 85 levels that you haven't seen even in the crisis of 2008 before. But to answer your question, I think both primary as well as secondary markets have proven themselves to be quite resilient. On the secondary market side, measures which had been put in place, for example, circuit breakers, have ensured that pricing happens in an orderly manner. And this has ensured that effectively buyers and sellers can find a match during a point of time where discovering that price was quite challenging. At the LSE, we saw a record day for a number of trades with 2.9 million trades soon after the UK lockdown was introduced. And on the primary side as well, I think once markets opened up, there's been an orderly amount of issuance, both in equity as well as debt capital markets. There's been over $5 billion issued in the UK for companies across retail, healthcare, businesses which have been affected by the pandemic or will improve our condition as a society in the future. For example, pharmaceutical businesses. And likewise, supranationals played an initial role in terms of shoring up debt capital markets, but now we've seen a wide array of issuance driven by businesses themselves. So yes, I think markets have proven themselves to be resilient and will continue to require this. How can we improve in the future? Continue to stay coordinated, have resilient systems for us to work remotely, whether it's video conferencing like this, or it's the manner that we conduct financial contracts, annual general meetings, and we at the stock exchange are doing a number of interesting things to help that in the future.
As the market operator, what is your take on COVID-19 response bonds?
COVID-19 response bonds have come in various shapes and forms. We've seen use of proceeds bonds primarily as a label, under a social bond, a sustainability bond label with use of proceeds related to access to healthcare, access to water, access to sanitation, improving the prospects for SMEs, which have had a highly relevant role to play post the impact of the pandemic. And supranationals such as IFC, the African Development Bank, have done fairly large social bond issuances as COVID-19 response bonds. But you've also seen bonds in other shapes and forms. The Nordic Investment Bank has done a sustainability awareness bond, which was beyond its framework. And Indonesia has done a general COVID-19 response bond, which looks at it mitigating the impact across its society. So I think the important element is for issuers to be transparent to their investors. At the London Stock Exchange, we have a sustainable bond market where we waive fees for any social bond, which mitigates the impact of the pandemic. We were first across the gates, and we were delighted to see other exchanges replicate this. And it's increased awareness across issuers as to how ESG or SRI investing can have a crucial role to play, mitigate the impact of the pandemic on society, and bring us back to where we would like to become future years.